afternoon, everyone, and happy Tuesday. It's Alyssa Corum here, and I'm joined by Ed Carson. We're going to get to the action in the major indexes. Yet another, if you can believe it, strong day for tech stocks. But Ed, give us a preview of the couple of strong names that we're going to be taking a look at today.
Yeah, good afternoon, Allie. We're going to take a look at Dynatrace and MongoDB, two software stocks that broke out today, as well as Nasdaq Inc., the operator of the Nasdaq stock market.
All right. Well, first, let's take a look at the NASDAQ index here. We have the tech-heavy index up about 1.4% today. The S&P 500 up 0.75%. The Dow as well. So tacking on yet another strong gain here, Ed. And now nearing that 12,000 level. So this rally is just in full force. It's not quite doing what we told it to do because we're at that upper channel line, but we are just continuing higher right now.
Yeah, it's pretty amazing. We keep on expecting it's got to slow down. It's got to slow down, but it doesn't. And so it's kept running up. You can see the green line, that's sort of the 21-day. We're getting sort of separated from that. We've had a lot of pullbacks to that. So if we pulled back to that, that would be pretty a lot. And obviously there's the 50-day line. That would really be a pretty big pullback if we came back to there. But software stocks were just enormous today. Obviously, Zoom Video is up like 41%, just huge, and took up a lot of other names. We're going to talk about some of them, but they're all moving. I guess the good thing is that Tesla came down today about 4% or so. It had been up 7% in the pre-market. They announced a stock sale. 4% is nothing for Tesla, no big deal. But if that had been up 7% today, we might have gone through 12,000 and gotten up to those levels that really would have signaled the risk for a pullback.
Yeah, so actually a little bit of a good thing to see Tesla down today. One thing that I do want to point out, so this is a little delayed. We see it on this chart up 1.2%. We finished up 1.4%, and this shows above the 10-day about 3.4%. So even a little bit more than that. Before these other couple of pullbacks, we were up 3.7% above that 10-day. Back here about 3.3%. So just yet further evidence. We don't want to predict, or preeminently get too cautious, but you have to be aware that bending with a pullback is something that you should be on guard for.
And then you should need to get a game plan just to make sure what is going to happen if the stock market does pull back pretty sharply. What are you going to do? Which stocks are you going to take off? How are you going to try to play that?
Yes, exactly. But for now, we are still seeing some breakouts, Dynatrace among them in the enterprise software group, rising along with the strength that we saw in Zoom. We saw a number of other enterprise software stocks gaining big today. So Dynatrace up about 6.4%, heavy turnover breaking out here. And earnings are out of the way. It doesn't report again, it looks like till the end of October. So an actionable opportunity here today.
Yeah, it's now a little bit out of the buy zone. But it was in the buy zone much of the day. Perhaps you could have bought it yesterday as it was still sort of sneaking up, trying to do an initial buy, but that sometimes happens. It's just really strong. I mean, it has one of the things it's a 2019 IPO, cloud-based monitoring of apps, and as you can imagine, a bunch of network IT folks not being in the office, and this would be a perfect situation. And it has great growth. As you can see, that earnings growth, triple-digit earnings growth the last 4 quarters. That's pretty impressive.
Yeah, that is very impressive. One thing, though, we always like to see that relative strength line hitting a new high, kind of confirming that breakout, not quite seeing that here, but we did like the look of this shakeout in the base there. So it's quite a strong stock to be able to come back to new highs as quickly as it did after that shakeout. But elsewhere, let's check in on MongoDB, MDB here. Another big gainer in the software sector today, up over 7%. But the tricky thing with this one and a number of stocks this earnings season is we're seeing this breakout right before earnings, which makes it very tricky.
Yeah, and given that Salesforce has great numbers, now you had Zoom with these great numbers, there's probably a lot of high expectations for anybody else coming up that you better have some pretty good earnings. So Mongo, it's not profitable, has strong sales growth. It broke out past 244.02, which is the official buy point. You could have bought earlier in the day at 238. 233. And suppose if you were really aggressive, you could have bought the prior day, maybe at 232.52, sort of like there's little things there if you wanted to start a position. So there was, if it weren't for earnings, there were places to buy it, but it would have been hard to do it in that situation. So definitely going to be looking at this, but you can see on some of these prior days, there's been some big moves on earnings, including the last earnings report, not a good reaction. So if you think, you would want to have a pretty good sized cushion or have some kind of option strategy to try to make sure that you're protected.
Yes, a very good point. You definitely want to have the game plan for earnings, make sure you have enough cushion heading into a report. That's why we typically don't like buying a stock outright ahead of earnings, because you never know what can happen. You can get a gap down like it had last quarter, but we'll have to see what comes tomorrow. There's definitely a lot of excitement right now, especially focused on the software sector. So we'll have to see. And last but not least, Nasdaq, as you mentioned, Ed, in DAQ, forming a nice tight base here, and it's nearing a traditional pivot above that 135 level. I guess you could have snuck in here over that 133.61 as well.
Yeah, probably could have snuck in there. And obviously the NASDAQ, and people think about the NASDAQ rising, but this is actually the Nasdaq Inc. It operates the NASDAQ as well as several European exchanges. You look at its sales and earnings growth, they've been picking up a little bit. There's a lot of transaction, a lot of activity, a lot of volume that's drawing in fees, new IPO filings. The market is really hot. There's a lot of activity going on Wall Street, and Nasdaq Inc. is taking part of it. And the downside is the relative strength line a little bit on this, but that's during this current consolidation. If you look at it though, it did very well during the correction. And actually, if you went to a weekly, you could also see that this has sort of had a gradual uptrend versus the S&P for nearly 3 years. So it's not, there's this little momentary dip, but it's really had a pretty strong little run here. And even before then, it had these periods of sideways action, but there's been some really good strength in here as well.
So one for the radar, everyone, and yeah, nice fundamentals, nice tight chart action. So the making of a stock with some potential, and we are handing over the reins to our leaderboard crew. It's the beginning of the month, so that means it is time for leaderboard scorecard. So we have Chris, Justin, and Dave. They're going to break down the last month of trade, and there certainly is a lot to talk about, and we encourage questions. This is for subscribers only, although, if you are on a trial, we definitely encourage you to take advantage of this as well over at leaderboard.investors.com. There's a banner at the top where you're able to click and join the webinar. But leaderboard, there's been just a lot of stocks going on and a lot of strategic moves that have been made over the last month over there.
Yeah, and it's great to hear about their winners and their losers and their decisions. Like, why do you pull back? Why are you adding on? It really helps you, maybe not just, how you're going to make your own investing decisions. It's really going to be a great time.
Yes, it is. All right, everyone. Thanks for tuning in, and we'll see you right back here tomorrow.